The NGX All-Share Index experienced loss of 3.57 trillion in market value in April, leaving the index up by 31.36% year-to-date. The month witnessed intensified sell-offs, with the index closing at 98,225.63 points, below the 100,000-point threshold. The banking all-share index was the worst performer, losing an estimated 25% in April. Analysts attribute the downturn to profit-taking, the interest rate hike, and a shift towards fixed income investments for higher returns. Well, joining me for more on this is Olaide Baanu, Equity Research Analyst at Adino Capital Limited. Thank you so much, Olaide, for joining me today.
Good morning. Thank you for having me.
Absolutely. Well, stock market investors lost 3.57 trillion naira in April. How are they reacting to this?
Last month, in the month of April, the equity market declined significantly, losing the 3.57 trillion naira, and this was largely impacted by the numerous numerous that the CBN issued to the market that last month. This include the significant increase, tightening of the monetary policy rate. Notably, we see that the fixed income rate increased significantly. For the 1 month tenor of Treasury bill, traded around 13% to 18% that last month. So this return for investors seems to be impressive from the fixed income market. So that's why the investors move from the equity market to the fixed income market. And also, if you look at the dividend, because this period, this is the dividend era. The dividend declared by those majority of the companies, especially by the banking stocks, were very low in terms of the dividend yield. They are very low compared to their prices, and also compared with what the fixed income rate was doing. So those return push investors from the equity market and to the fixed income market, and we see that this decline happened in all the major market sector, largely driven by largely impacted on the banking stocks, the insurance stocks, going to the consumer goods, the industrial goods, and the oil and gas sector. So it was generally, and it's a bad omen for the market to say, okay, yes, the market declined, but however, this is a very good notification to some investors to say they are coming at a lower price, buying at lower price, and able to sell at higher price when the market rebounds.
All right, I like what you just said now, talking about, for some persons, it's an opportunity for them to come in. But do you think retaining one's investments in the NGX, at this point in time is actually a wise thing to do while watching the trend?
It's about the risk appetite of individual investors. So if you are looking at 1 year, 2 years investment, you can say, okay, this is very good for you to come in. But if you are looking at a very short period, like a month or so, you may want to be very cautious about what you are trading and what's the type of stock you are buying into. So by and large, I still believe the price of those stocks, especially the banking stocks, in April, the banking stock declined by about 24.8%, and that was significant decline. So this poses an opportunity for investors to come into that particular sector and another sectors at large.
All right, still talking about the banking sector, I like that you've started the conversation around how it lost about 25% during that particular month. Now, looking at recapitalization, what impact is that even going to have on those stocks? Mr. Baanu, if you can hear me, kindly confirm.
Yeah, I can hear you clearly now.
Oh, you can hear me now. All right. So I was asking you, talking about the banking stock, we saw that they took a hit during this past month that we're reviewing at this point in time. I'm saying by the time the recapitalization plans begin to unfold and all of that, when the banks start this recapitalization process, how is that going to impact the stock market, especially the stocks?
we see that from the circular the CBN released based on this reverse recapitalization process was that the bank should not include their retained earnings into it, and it should be strictly the share capital and the share premium. We see that majority of the bank have begun to sit around what the amount they are going to raise in the market, and it's about the right issue. So I still believe that the price may actually go before the banks conclude on the volume and then the price at which the stocks will be. I mean, the right issue will be issued to the market. The investors may be able to look at what the current price it is now and the price at which the banks is going to raise new capital. So between that period, there will be a kind of positive momentum. May not be significant, but positive momentum around the banking stock before you can say, okay, yes, this is what the banks able to look at. However, I think around last week, the banks had discussion with the CBN, and is talking around if they can actually include the retained earnings in the new capital and the reverse capital requirements. So I still believe between now and then, the price will still fluctuate at the current price and also at the higher price as much as possible.
All right, so looking at all of this now, I understand the losses were anticipated, but don't you think this decline that we saw across board actually beats imagination? And I know we've talked about what to attribute all of this to, but let me get your reaction to the results released so far. Do you think that they offer any optimism? I mean, the Q1 results that we have seen so far, any optimism?
Majority of the results we've seen in Q1 so far, especially for the banking stock. Last week, we saw the likes of the Access Bank recording significant increase in their net profits. So this was largely driven by the current exchange rate, the revaluation of the FX reserve they are having. So this is still part of what we are saying to say, okay, the company are doing fundamentally okay in terms of the numbers, but is it what the CBN are actually looking at to say they can recapitalize? I mean, they can increase they can include the retained earning into the recapitalization value they are looking at. So I still believe the banking stocks as the fundamentals and begin to look at which bank can consume the other bank in terms of the acquisition and also the merger within the process of recapitalization. It's obvious that some banks may go, some may acquire the other ones, may merge with other ones, so to say. And within that process, we're able to look at which bank is what's going to be the price of the one that is being merged with the other one.
So if I get it correctly, you're saying that, investors should adopt a sort of wait-and-see approach to the recapitalization on the rights issues to know what these banks will be saying, because more information definitely will be revealed to the market in the coming days.
Exactly.
All right, so away from the banking stocks, generally speaking now, let's look at, the equities market. Apart from the banking stocks, what other sectors do you think, investors should also watch?
They are looking at the telecom sector and also the consumer goods sector. It's obvious that the consumer goods sector were largely impacted by this FX revaluation, and they are largely negatively impacted. Recent years, we've seen that when this happens, the consumer goods sector largely take the hit of that revaluation, and they've always been bouncing back. So this will definitely happen to them, and by the time we begin to see in the next 12 to 24 months, probably the next 1 or 2 years, the consumer goods, if the exchange rate stabilizes, the consumer goods sector will rebound in terms of their financials and able to say they are having dividend earnings. So investors taking the advantage of the current price, we definitely be happy as at that time, so to say.
But if you were to judge, what do you think the elastic limit for this consumer goods sector will be? Because you're talking about, maybe in the next few months, things should stabilize. But if things do not stabilize, for how long can they continue before they probably get to that point where, they reach the elastic limit?
As I said, it's about the stability of the exchange rate to say if the exchange rate stabilizes at this current rate.
Yeah, I understand what you said, but I'm saying, I understand what you said. I mean, I got that correctly, but I'm saying that if we do not see stability, for how long can these companies cope before it becomes very difficult, really, or before things get out of hand?
You know, majority of these consumer goods have FX obligations to their majority to their parent holdings. So what we can see is what is likely to happen and to be the advantage of those companies is that the debt obligations should be converted to equity, and that's when we begin to see positive shareholders fund in that regards. And to that, we may begin to the companies may start breaking even, looking at that action to be taken. And also, as you mentioned, the elastic limit, if continued this way, if nothing is done, and the exchange rate is not stabilized, it continue to fluctuate the way it is, and definitely for a long time, investors will definitely dump the consumer goods further.
And that doesn't look good. I mean, that's what I think anyway.
At all.
All right. Now, do you think we should actually be bothered about this? I mean, what's happening in the equities market? Because at the end of the day, we can explain it by saying people are just probably reshuffling their portfolios and taking positions in instruments with better yield. So do you think we should be bothered about the downturn, the bearish sentiment that seems to have engulfed the equities market?
No, because this current downturn, as I said earlier, is provide opportunity to investors to say they are coming into the market. When the year started around January and February, the market was very bullish, and investors are taking about they are taking little of their profits, and it's expected that the markets will decline, and that is what just happened.
But you know what? This decline is taking too long, and there are other, fundamentals that sort of support the decline, and we're still waiting for that catalyst that will spur some, bullish sentiment in the market.
Yeah, the catalyst will definitely come. It may not be currently, it may not be this week, but it definitely come. And it's just for the investors to be very cautious about their trading. If one wants to invest into the market now, is to do a kind of strategic investment. Probably if you have 100% of your money to put into the market, you can start breaking it about 25% of investment to a particular company today, so to say, for example. Then probably after a while, if the price decline further, then you can bring just a bit of investment within that process. So by the time the market rebounds, the investor will definitely smile to the bank.
Well, there is no doubt that the rate cuts by the MPC dealt a heavy blow to the market. You also talked about that. Now, the MPC doesn't seem to be retreating anytime soon, or so it seems. What are your thoughts on a further hike? I mean, if by the time they meet in May, they decide to, hike the interest rate, what do you think will happen? Or what are your thoughts about that generally? Do you support a hike? Do you think it is good for the economy?
The hike is good for the economy. We saw the impact of the hike in terms of the exchange rate as well, and in terms of other asset classes. I still believe the interest rate may not be, the further tightening may not be as significant as it has been in the last two meetings of the MPC. So that's going to have impact on the market. And as I said, the tightening may not be significant, and the impact as well may not be significant into the equity markets.
That's quite optimistic, to say the least. So when should we expect, some form of stability or even higher yields in the equities market? I mean, I want you to be sort of specific. I'm not saying you're looking into a crystal ball, but I just hope you would be able to offer investors, some form of advice, about how they can position themselves for that time.
As I said earlier, the investors can begin a bit trading in terms of buying little by little into their choosing stocks in the market.